With me is Kanishka Sarkar, who is joining us from our Delhi studio. And Kanishka, a lot of action yet again on the tariff front, where US President Donald Trump has sent letters to a few more countries on tariffs that could range anywhere between 20 to 40%. US markets, though, ended in the green yesterday, isn't it?
That's right. In fact, after 3 days, the Wall Street saw gains in the session overnight. The S&P 500 and Dow Jones, they posted their first positive sessions in 3, with a rise of 0.6% and 0.5% respectively, whereas the Nasdaq Composite, that jumped almost a percent to close at a record. Now, these gains were spurred by optimism around the artificial intelligence trade, which sent Nvidia shares nearly 2% higher to briefly become the first public company to be valued at $4 trillion. Now, this bullish AI sentiment helped lift stocks and investors move past the latest developments surrounding Trump's tariffs, as you just mentioned, Ashesha. However, do remember now President Donald Trump has announced a 50% tariff on Brazil, so that's something that the market is going to watch out for. Now, concerns over this impact of tariffs, specifically as it relates to inflation and the labor market, also came up in the minutes from the Federal Reserve's June meeting that was unveiled yesterday. However, the minutes showed that policymakers were split on how many interest rate cuts the central bank should make over the coming months. Moving on, investors are now awaiting more developments on the economic front, as jobless claims data is something that is due later today. But how are things looking on the crude front, Ashesha?
Subdued action coming in for the commodity markets today morning. Although Brent crude has snapped its 3-day gaining streak, it is now sitting with a cut of nearly 0.3% as we speak. For this week so far, Brent crude has gained nearly 2.5%, and it is currently trading near that $70 per barrel mark. So not much action that we've seen today morning, but several factors continue to remain at play. One, of course, is tariff, but the second and the most important one is also rising inventories of crude oil in the United States. So data suggested that inventories climbed by about 7.1 million barrels last week. That is the highest that we have seen since January this year. So inventory continues to remain on the higher side, because of which Brent crude prices continue to fall. And of course, on the back of that OPEC Plus outcome that came in earlier this week, where supply could increase in the global market, and Brent crude today is sitting with a cut of nearly 0.3% to trade near that $70 per barrel mark. But let's also talk about the yellow metal market then. Gold, that one is trading at $3,317 per ounce. It is down 0.6% today, but remember, we saw a solid 2% uptick in yesterday's trading session. One trigger, of course, is tariff, but the second one for gold is the movement in interest rate that we could see over the next few months. Now, FOMC minutes suggested that there is divergence in what the outcome could be going forward. 7 out of 10 analysts believe that perhaps we could see at least 2 rate cuts in the rest of the year. So that's as far as interest rate environment is concerned. But for the moment, Brent crude is trading near $70 per barrel mark, and we have gold, spot gold, which is trading near $3,320 per ounce mark.
That's right. So those are the levels we're tracking as far as oil and gold are concerned. But shifting focus to the Indian markets, then it was a range-bound trading session on the Wall Street yesterday. The Nifty failed to hold on to that 25,500 mark as well. Meanwhile, the broader indices saw mixed trade. Now let's go across to Snehi to get us a roundup of all the market action that happened yesterday.
Absolutely flattish moves is what we've seen in yesterday's trading session. Nifty has once again ended in the red with a cuts of about 0.2% and below the 25,500 mark yet again. Similar moves coming in for Sensex. You had Nifty Bank also that was slightly under pressure, flat but ended with a slight negative bias. That's Nifty Bank. You had India Wix that saw a further cool off of 2%, and we've ended below the 12 mark on India Wix, so that's going to be an important metric to watch out for, but it's a positive as of now. Let's talk about some Nifty gainers and losers. Shriram Finance, Bajaj Finance, HUL, Coal India, Ultratech, all of them have done well. In fact, Ultratech sitting at a fresh life high as well. What put pressure on the Nifty 50 yesterday was HCL Tech, Tata Steel, Hindalco, Apollo, Tech Mahindra, Reliance and Dr. Reddy's. In fact, we've seen a 1.2% cut coming in on Reliance, and that has led to the market taking a little bit of a fall towards close as well. The broader end of the market, the mid-cap index didn't do all that much, but the small cap index was bucking the trend and up in the green about 0.5%. So good moves coming in from the small cap space. This also remembers on the back of the AMFI and SIP data that we've seen, especially in the small cap sector. But let's talk about some stock specific action. Of course, pharma and metal stocks were in focus on the back of the Trump tariff announcements, while you had stocks like Hindalco, Vedanta too in focus on the back of a short selling report coming in by Viceroy. So you had Hindalco, Vedanta, Hindustan Copper, all of these stocks were under pressure from the metal basket, but the pharma pack has came out unscathed in yesterday's trading session and held on to the greens. So sectorally, with FMCG being the biggest winner, you had auto, pharma and financial services that closed in the green. But on the flip side, you had realty, biggest loser. You had a Nomura negative note coming in on Phoenix as well as Godrej Consumer. So 1.5% cut coming on Nifty Realty, followed by metal, IT, media, PSU banks, energy and Nifty Bank absolutely flat. That was the texture of the market yesterday. When we interacted with our experts at the closing show, both our experts, Kunal and Sharan, are expecting a flat open today. Sharan is watching out for levels around 25,430 to 25,550, with 25,500, 550 being the near-term high that he is seeing. So, well, let's watch out for all of these levels, and it's going to be an important trading session to watch out for, given that we once again closed flat yesterday.
The important levels that you need to keep an eye out on in today's trading session. Snehi, thanks so much for joining us with all those details. Nifty ended very flat in yesterday's trading session, but how should you position today? How is the global macro setup looking like, and what should you in for? To discuss this, we are now joined by Jeff Dennis, independent emerging markets commentator, now joining us. Thank you so much for taking your time out, Mr. Dennis, and joining us here on ET Now. How do you read the entire tariff saga? Yesterday evening, yet again, President Donald Trump has sent letters to several countries, 50% tariff on Brazil, 25% to Sri Lanka and several other countries. How do you read this move, and are you bracing up for a lot of volatility over the next 1 month?
I think that, well, first of all, we don't know if won't back away again like he's done before. You know, we don't. The tariffs apparently going to be launched on August the 1st, so we'll see if he backs away again. But I think the important thing here is the markets are not paying as much attention to this as they did before. So in other words, when we had the so-called Liberation Day in early April, markets in the US especially completely fell apart. Everything went down. The dollar went down, bonds went down, and equities went down. Whereas everyone's a bit calmer now. And I think the reason people are calmer is, first of all, they don't know if he's going to carry through his threats to impose these tariffs. And also, I think very importantly, there's a little bit more reassurance, I think, that the inflation impact of these tariffs within the US may be less than people had previously thought. So we've got to watch it. There is a global trade war going on, but I think we're not going to see a return to the extremely volatile negative trading in the US and therefore around the world that we saw in the early part of April.
Okay. Hi, Jeff. This is Kanishka also joining in. And, just like you were mentioning, the last time we spoke, you said that the tariff deadline could be extended. Now, it hasn't exactly been extended, but the implementation deadline we have, and that's new. So that's exactly what happened. But, now talking about the markets, do you feel that in any way they're underpricing the impact that these tariffs could have going forward? Or do you believe that the market has, sort of gotten used to these deadlines getting pushed?
I think the latter. I think the markets have definitely, in fact, both really. The markets have got used to these deadlines being pushed. But I think were these tariff levels to be actually imposed, and presumably a lot more countries may well find that they join this list, because this list now it came out in two slugs, if you like. I think if these tariffs were imposed, I think that this would eventually cause the markets to be quite volatile for a period of time. They are bad news. They're not good for the global economy. They're not good for the US. They're not good for all the countries that are being tariffed. It's just we just don't know whether these tariffs are actually going to actually be imposed. But this is still absurd policy, I should say. And I think it's also worth pointing out that the number of deals that Trump has made on trade, I suppose you could say three: the UK, China, and Vietnam. And perhaps India's not far away, and that's why India may get some protection. Unless I've missed it, I don't think India's been given another tariff announcement, if you like, in the last week or so. But if he carries these levels through, yes, we will go back to volatile markets, just maybe not quite as volatile as they were in April. Because at the end of the day, what investors want to know is what will be the impact on the US economy, what will be the impact on US inflation, what will be the impact on the US trade deficit, and of course, through all of those, what will be the impact on the US dollar?
As far as tariff is concerned, but also wanted your thoughts on the recent FOMC minutes that came out yesterday. There's a lot of divergence in what officials think the outlook could be for interest rate for the rest of the year. Although 10 on 17 analysts believe that perhaps we could see at least 2 rate cuts for the rest of this calendar year. How do you view this, and what, in your opinion, will the interest rate trajectory be for this calendar year and for FY26?
I think we're going to get 2 rate cuts. I'm in that camp. I don't think we're going to get a rate cut in July. I think we needed a softer employment report at the beginning of the month to get the rate cut in July. But I think we'll get one in September and one in the fourth quarter, because I think what's happening underneath everything that's going on is the labor market is beginning to soften. It's not softening dramatically, but it's also becoming a little bit, what should we say, fixed in place. There's not many people moving. There's not many people taking new jobs. There's not many people being laid off. There's just not a lot of new job opportunities. Sentiment towards the labor market has also deteriorated. And I think that's going to be powerful support for a couple of rate cuts. And also, as I've said earlier, I think if in the end, the inflation impact, which frankly we've not really seen yet from the tariffs and just the general inflation story, is perhaps a little bit less fearsome than we all feared it would be a few months ago. And to be fair, the Fed feared it would be a few months ago. I think that will open the way for interest rates to be cut. Chair Powell will not cut rates because Trump tells him to. Chair Powell will cut rates because they think the economy is under a little bit of pressure against a background where the inflation story is still reasonably under control.
Okay. All right. Thank you, Jeff. Thank you so much for that view and helping us decode what the global market setup is looking like as we head into the trading session today. Thank you so much for joining us. With that, we'll let you go. All right, then, shifting focus back to the Indian markets then, let's also take stock of all the stocks that are going to be buzzing in trade today on the back of news flow and several announcements that have come overnight. In fact, Abhishek, Sharad and Varun, they're all joining us from our research team to help us take us through all the stocks that are going to buzz in today's trade. Abhishek, let's start with you. What are the stocks on your list?
Overnight, US has proposed a 30% kind of a reciprocal tariff on Sri Lanka against 44% earlier. CEAT has recently acquired a OST brand called Camso, and Camso caters to the US market through its Sri Lanka plant. So this partial rollback of a tariff rate on Sri Lanka is directionally positive for CEAT. Second is on the NBFC sector. So some source-based news flow is indicating that government is looking for 2-3 large global level banks in the domestic market, considering the expansion in the overall economy. In light of that, it has been assumed that some of the large NBFCs will get a banking license. So NBFC stocks are likely to remain in radar on this flow.
So NBFC stocks and CEAT on focus on the back of that tariff announcement that came in on Sri Lanka. But Sharad, coming to you then, LIC, Asian Paints and several other stocks in focus. Tell us more.
LIC is in focus as sources to ET Now suggest that DFS has given approval for LIC's OFS as well. Now DIPAM will be initiating the process. Now this is largely a neutral impact expected to the stock, and also look at it, Asian Paints would be in focus as the company has sold almost 4.42% stake in AkzoNobel at almost 3,651 rupees per share. That would be largely neutral as well. Instead of positive impact, if you look at it, that is Ambuja Cement, the company's subsidiary, has actually successfully commissioned the brownfield grinding project at Sindri plant, Jharkhand, with almost 1.5 million tons per annum of total capacity, and now the total installed capacity moves to 104.45 million tons per annum. And lastly, HCL Tech, there is a positive news flow as the company has joined Astemo Cyprus and has partnered with them to accelerate autonomous and smart vehicle systems.
All right, so those are the stocks to watch. Thank you, Sharath, for sharing that list with us. But Varun, now coming to you, you have several oil and gas names on your list. What's the news flow here?
India and GAIL, they both would be in focus today because both the companies have actually signed a purchase agreement for 15 years for sale of gas, and this would be for supply of around 9 lakh SCMD of natural gas from Oil India's Rajasthan field. So keep an eye on Oil India and GAIL as well. Brigade Enterprises would be in focus because the company is having a board meeting on 14th of July and the company would actually consider fundraising on that day. So keep an eye on Brigade Enterprises. Keep an eye on PFC and REC because Morgan Stanley has initiated coverage on PFC and REC. For PFC, they have a price target of around 508 rupees and REC, they have a price target of around 485 rupees. They are overweight on both these stocks. The price targets are, implying an upside of more than 20%. They say that the overall fundamentals are good, and also they say that the entry point on both these stocks are very attractive, and hence they have initiated coverage on PFC and REC. And lastly, keep an eye on MGL because NCLT Mumbai branch has actually approved the scheme of amalgamation of subsidiary Unison Enviro Private Limited with Mahanagar Gas. So on that note, keep an eye on Mahanagar Gas as well.
Mahanagar Gas and several other stocks in focus. Varun and Abhishek, thanks so much for joining us with a list of all the stocks that are in focus today. Sharath, stay on with us. We'll come to you for how the F&O setup is looking like. But before that, Snehi is joining us with a roundup of all the cues that you need to keep an eye out on in today's trading session. Snehi, over to you.
Well, yes, lots of cues to watch out for, and the first and the most important one is going to be that we are going to be kickstarting the Q1 FY26 earnings season back home. Along with that is, of course, going to be the Nifty expiry as well. But while we are talking about earnings season, from the Nifty 50 pack, you have TCS, IT Bellwether, always the first one from the Nifty 50 group of companies to kickstart the earnings. So TCS numbers will be coming post-market hours. From the broader end of the market, you have IREDA that will be coming out with its Q1 numbers as well. Shifting focus to some global news and updates. From the US, we're expecting to see initial jobless claims data, and from Japan, the PPI data will be out. So watch out for that. Once again, shifting focus back home, let's talk about some corporate action and board meetings expected tomorrow. Dr. Reddy's will be a stock in focus because it's going to be trading ex-dividend. And also a whole host of stocks, the likes of Canfin Homes, IDFC First Bank, Mahindra Logistics, Shriram Finance, Sobha, UPL. Tomorrow is going to be the last day to purchase all of these stocks if you wish to be eligible for their dividend record date. So watch out for some buying action in these stocks as well. AGMs, you'll have Vedanta and Kalpataru projects that will be holding their annual general meeting. So watch out for both of these counters. And well, in terms of some overall events, from globally, we have some commentary coming in from the Fed, wherein San Francisco Fed President Mary Daly is all set to speak. So watch out for all of these cues. And well, it's going to be an interesting session, given that we are going to be kickstarting the Q1 FY26 earnings.
All right, so the Q1 FY26 earnings season starts today, and several other cues to watch out for. But let's also bring back Sharath to tell us how the F&O snapshot is looking like today.
Overall F&O positioning, if you look at it, the current India VIX that's coming in below 12 now. Of course, that means the volatility in the markets that is actually coming down more and more. Interestingly, the PCR changes. Previous day it was 0.94, and current levels, both Nifty and Nifty Bank at comfortable positions, both below the 1 mark. Nifty is at 0.7 and Nifty Bank is at 0.95. And of course, we have seen over the last 9 to 10 trading sessions there has been consolidation in the indices as well. Now, if looking at the Nifty index futures, change in open interest has been very insignificant, and activity suggests a little bit of short build-up as well. And interestingly, the most active strike price for the Nifty weekly would be coming in at a call option of 25,500. The call writing is happening at the same levels, even put writing is happening. The highest open interest strike price in the Nifty weekly expiry for call, there are two levels, 25,500 and 26,000. For Bank Nifty, there is also an activity of short build-up happening with the highest open interest strike price coming in at put at 56,000, and even call, the number remains the same. Now let's look at how the FI long position after the previous trade has actually picked up. It has actually slightly gone down, coming in at 27.7%, and when you look at the DI long position, that's almost remaining the same, flattish at around 63 odd percent. The retail long position, that also coming in at almost 58%. There are two stocks in the FNO band. That's one is RBL Bank and the second one is Hindustan Copper.
That's how the FNO setup is looking like for today's trading session. Sharath, thanks so much for joining in. But let's have a look at how Asian markets have performed this morning. And Nikkei, Japanese market, that one has started slightly on a negative note, down 0.5% as we speak, 180 points gone on Nikkei 225. Kospi, meanwhile, is on the higher side. That one is up 0.6%. Hang Seng Index should also come up for you on your screens. That one has also started in the green, up 0.2%, 52 points higher for the Hang Seng Index. Shanghai, meanwhile, is also up 0.2%, 3499 is where it is currently trading. And we also have ASX 200, which has started positively, up 0.5% as we speak. Nifty implied open is also suggesting a slightly positive start for the Indian markets, flat though as we speak. Up 12 points, 25,571 is where the GIFT Nifty is currently trading. So Japanese market, Nikkei is down, but all other Asian markets have begun on a positive note, and GIFT Nifty is also suggesting a flat to slightly positive start for the Indian markets. Kanishka.
That's right. So that's how the Asian market setup is looking like, and a flat to positive start is what we are penciling in for the Indian market. But on that note, we'll take a very short break on this edition of Market Cafe. We'll be right back with more on the other side.
Lending should be based on genuine needs and repayment capacity of the customers, and loans should not be aggressively marketed or pushed. I hope, because you're at the last mile, these messages are going to be seriously taken, because that's what is going to be the underlying strength of NBFCs in the years to come. Interest rates should be reasonable. This, I say, despite you having to borrow at some highly rates which you would otherwise wish to be far lower, but you should work together with the scheduled commercial banks, talk to them, see how best you can raise revenue.
That's the word coming in from Finance Minister Nirmala Sitharaman on NBFC sector. But shifting focus then, and as Trump proposes 35% tariffs on textile imports from Bangladesh, we caught up with experts to decode its impact on India. And will the growth capital from FIIs start coming back to India once tariff uncertainty clears? Listen in to what these experts had to say.
I personally think that's why you would see solidity there, and that's how discounting of any news happens in the market. So I personally think I'm not too worried, and I would not even want to second guess it. I would want this whole thing to unravel and then try and see which sectors will have a benefit, which will be a detriment. How does a fund manager position to capitalize? Like I said, textile, I'm very bullish. If whatever you do, I think there will be a huge potential for the textile sector, apparel sector, to capitalize on the US market, and that can only go up from where it is.
Within the emerging market pack, India is the fastest growing country by a distance, right? I think China is nearest at about 4. So I think growth capitals from FIS should start coming back to India once this situation stabilizes as far as the tariff and the uncertainty is concerned. When that comes, along with the domestic support, so far the domestic flows have managed to keep the markets in the green and prevent any sharp reaction to Indo-Pak war or tariffonomics or anything. But once the FI flows start coming back to India, I think the markets will rapidly rise to a new high because domestic flows are going to continue.
All right, so those are some expert views on tariffs. But moving on, now a court of inquiry has been constituted to ascertain the cause of the accident in an Indian Air Force's Jaguar fighter jet crash yesterday. Now, the tragic incident occurred yesterday afternoon during a routine training sortie. The aircraft went down with 2 pilots on board. In a statement, the Indian Air Force has confirmed that both pilots succumbed to fatal injuries in that accident and that no damage was caused to any civilian property. Times Network's Srinjoy Chaudhary joins us with more details.
A Jaguar of the Indian Air Force, which is a twin-seater and an Anglo-French aircraft, crashed after it took off, 9 minutes after it crashed from Suratgarh. Now, we don't know the reason for the crash, but very unfortunately, what we are getting to hear is that the 2 pilots, a squadron leader and a flight lieutenant, succumbed to their injuries. Naturally, there is an inquiry to find out what led to the crash, whether it was a technical failure or pilot error or a bird strike. These are the 3 usual causes. But it will be important for the Indian Air Force to find out what was the reason for the crash and then take suitable measures.
Srinjoy, thanks so much for joining us with those details and unfortunate incident that happened yesterday. But shifting focus to some national stories then, and 2 decades after Singur Andolan, West Bengal Chief Minister Mamata Banerjee met with Tata Sons chairperson N. Chandrasekharan. The meet was primarily focused on state's industrial prospects and potential investment opportunities. Experts believe this could be a sign of a possible reset in ties between the Tatas and the state. Death toll rises to 13 in bridge collapse in Gujarat. This happened after a part of aging Gambria Bridge in Vadodara collapsed unexpectedly yesterday.
Heavy rain lashed Delhi NCR yesterday evening. Several areas across the national capital region reported waterlogging following the downpour, leading to traffic jams. Just 2 days after announcing revised tariffs and a delayed deadline, there's no stopping Donald Trump. He has sent new letters to leaders of 7 more countries, including the Philippines, Brunei and Sri Lanka, dictating steep new U.S. import tariffs starting August 1st. Now, this brings the total list to 21 nations, with rates ranging from 20% to 40%. Now, Trump has posted screenshots of the letters on Truth Social, saying tariffs are needed to address what he calls trade deficit disparities. Even small trading partners like Moldova are on the hook despite minuscule deficits. Trump hinted some rates might be adjusted later depending on each country's ties with Washington. He also said that copper tariffs will be effective from August. Let's listen into an excerpt.
Brazil, as an example, has been not good to us, not good at all. We never had anybody in the White House that understood the numbers or were into it like I have. You know, we've taken in hundreds of billions of dollars in tariffs, hundreds of billions, and we haven't even started yet. And it's going to be a great thing for our country. I think it's going to be a fair thing for the world. And we really haven't had too many complaints because I'm keeping them at a very low number, a very conservative, as you would say, number. And we haven't had, I'm sure they will be complaining at certain points, but we haven't had complaints. We've been treated very unfairly by both friend and foe.
Shifting focus to some global stories then, Brazil is firing back at US President Donald Trump. President Lula da Silva says Brazil will respond with reciprocity to Trump's surprise move, imposing a steep 50% tariff on Brazilian imports starting August 1. The tariff, up from 10%, is partly meant to punish Brazil over the prosecution of former President Jair Bolsonaro and what Trump calls an unfair trade relationship. Lula, invoking a new Brazilian law, warned that Brazil will not accept being lectured and will hit back in kind. The Brazilian real tumbled over 2% following the announcement. Meanwhile, the European Union seems to be stuck in trade limbo as it waits for Trump's final decision. On a much anticipated deal. Trump hinted an agreement could come in as soon as this week after the European Union offered to open its markets wider to American farmers, ranchers and fishermen. Brussels is reportedly ready to accept a 10% baseline tariff, far lower than the 50% Trump's earlier threatened. EU chief Ursula von der Leyen says that the bloc is preparing for all scenarios while defending its interests.
Most US Fed officials see rate cuts on the horizon, but just how many and how soon remains up in the air. Minutes from the June meeting reveal that policymakers are split between battling stubborn inflation, partly fueled by Trump's tariffs, and signs of a cooler labor market, while the Fed held rates steady at 4.25% to 4.5%. Officials agreed to stay cautious and data-driven. Recent inflation data have been mild, with consumer prices up just 0.1% in May. Meanwhile, job gains have slowed and consumer spending is muted. Next up, OpenAI is gearing up to launch its own web browser, taking direct aim at Google's Chrome dominance. Now, the new browser will integrate OpenAI's AI agents, allowing them to perform tasks for users from booking dinner to filling out forms right inside websites. However, analysts warn that it could be a tough fight since Chrome controls over 2/3 of the global browser market with more than 3 billion users.
Linda Yaccarino is stepping down as CEO of Elon Musk's X in a surprise shake-up just months after the platform was folded into Musk's AI venture XAI. In a post on X, she said that it was her decision, though Musk's history of abruptly ousting deputies raises questions. Her departure adds to the turbulence across Musk's empire, from Tesla's falling sales to advertising struggles at X. Analysts cite possible clashes with Musk's famously hands-on management style as a likely factor. And tech giant Nvidia becomes the first ever company to hit 4 trillion market cap. The stock is soaring away in trade on the back of this. The chip maker benefited heavily from the AI boom. Remember that it just crossed 3 trillion market cap in June last year. In fact, ET Now spoke to Jaspreet Bindra, co-founder AI and Beyond, and Ray Rong on major factors leading Nvidia to hit this milestone. Let's go across and listen in.
3 factors behind that. Number one, the fact that all the big tech majors have not let up, but in fact have accelerated their spend on AI. So that's factor number one. Factor number two is that whenever they spend on AI, the maximum spend goes to NVIDIA, which has an almost monopoly 80% market share of the chips which power AI. And number three, and most important probably, is the thaw which has happened between the US and China, therefore making it possible for NVIDIA to sell underpowered chips to China also, which is about 20% of its revenue. So I think all these 3 things combined made it reach 4 trillion, and who knows, maybe 5 trillion in another 6 months or so.
When you think about Jensen's visions, it's multiple layers. This is not just about chips. This is about revolutionizing the complete computing industry and how we interact. And it's not just AI. It goes all the way from chip to software to the future in terms of how we actually make decisions, how we actually build out the next set of industries going forward. And so this area on 4 trillion, that's just the beginning. This stock could get easily to 6 trillion, 8 trillion. And part of it's because not just the sovereign data centers that are going to emerge, but it's also the software applications that are being designed for the future, the networking capabilities going forward, and of course, what we do with robotics and what we do with humanoids and artificial intelligence in a physical presence. And so this is going to be everywhere. It's going to be pervasive. And when you look at that NVIDIA ecosystem, that's what you should be looking for, is all the multiple sets of businesses that are going to be built on the backs of one set of computing platforms.
All right, let's shift focus to tariffs on Brazil again. Now let's get in Srinjoy Chaudhary for more perspective on Trump's offensive on Brazil by imposing 50% tariffs on the country. Now, Srinjoy, is Trump risking animosity with its allies and the largest South American country with this move?
The 10% was really about de-dollarization, because President Trump believed that these BRICS countries, and let's not forget that Iran is one of the countries, and also China, were out to have a separate currency. Now, S. Jaishankar, External Affairs Minister, has made it clear that that is not so. But nevertheless, that 10% is still a threat. As far as Brazil is concerned, President Lula, who is left-leaning, and President Trump have not even met once. It's hard to believe that, but that is actually true. They have never met. And yet, President Lula has met Xi Jinping at least twice. So, apart from that, if there is a 50% tariff on Brazilian exports to America, the one lot of people who will be very upset will be American coffee drinkers. And there are millions of them because the majority of American coffee comes from Brazil, because Brazil is the largest producer of coffee in the world. So that apart, there are other agricultural products that Brazil exports, also rubber and so on. But it is clearly a flashpoint because Brazil's exports are huge to America, and a 50% tariff will, of course, hurt Brazil, but it will also hurt American taxpayers, American consumers, because Brazil's products are directly consumed. I mean, it's a matter, it's not a manufacturing input that Brazil sends. It is coffee. Now, coffee is something that goes directly to virtually every American every morning. So it will directly affect the American consumer. So that is something that will have to be worked out over the next few weeks.
Thanks so much for joining us with all those details. But shifting focus to some other stories then, tennis goat Djokovic is into a record 14th Wimbledon semi-final, but not without a scare. The 7-time champion battled past Italy's Flavio Cobolli in 4 tight sets. Djokovic survived a late slip on match point, but ultimately closed it out after 3 hours and 11 minutes on the centre court. The Serb now faces world's #1 Jannik Sinner in a blockbuster semi-final on Friday. Djokovic is chasing a record 25th Grand Slam title and says he is motivated to keep going toe-to-toe with tennis's new generation, including the likes of Sinner and Carlos Alcaraz.
All right, then, on that note, we'll take a very short break on this edition of Market Cafe. Be right back with more on the other side.
In the year to March 31. In the year, the net portfolio value rose to a record high of 434 billion Singapore dollars. The investment firm invested 52 billion Singapore dollars and divested 42 billion Singapore dollars in the year. And according to Temasek, the performance was helped by the Temasek's listed Singapore-based portfolio companies and also direct investments in markets like China, US and in India. Now, if we see the one-year total shareholder return, that was 11.8%. In Singapore dollar terms and 12.4% in US dollar terms. And the total shareholder return for a 20-year period was at 7%, the 10-year at 5%. The Temasek says the focus will remain on investing in market leader companies, alternative assets, core plus infrastructure and also AI value chain assets. On a mark-to-market basis, the net present value as on March 31 would have been about Singapore dollars 469 billion. And over the past financial year, the net investments were Singapore dollars 10 billion, while the net reversing a net divestment of Singapore dollars 7 billion last year. In India, Temasek's key investment was in Haldiram, which is a snacking and restaurant giant, where Temasek took a minority equity stake.
Anurag, thanks so much for joining us with all those details. So that's an ET Now exclusive for you. But shifting focus then, IT bellwether TCS will kickstart first quarter earnings season today, and muted to flat growth is expected amid headwinds from the BSNL deal. My colleague Pulkit is now joining us with what the street is expecting from TCS numbers this time around. Pulkit, over to you.
If we talk about particularly with this TCS, the revenue is expected to increase by 0.9%, and in terms of USD, in INR terms, we are expecting an increase of around 0.1%. For EBIT, it is around 0.3%, and for profit after tax, we are expecting a decrement of around minus 0.2%. The key factors that are influencing the above numbers: first is the exit of low margin BSNL deal, and it may provide a partial cushion to EBIT margins. Deal wins are likely to remain steady, but conversion to revenue may remain sluggish. There are some key monitorables that we can focus in the management commentary. First one, majorly on the demand part, how the demand is shaping up. For FY26 guidance, the total deal win amount, the headcount and attrition rate, Gen AI trends, tariff impact, and US and Europe business outlook. One more thing that need to be focused is the segment-wise revenue. BFSI segment, we are expecting to remain stable, but if we talk about the retail, auto, telecom, that may remain soft.
All right, so the earnings season kicks off with TCS earnings later today, but let's also take a look at how the Asian markets are faring this morning. Now, as Ashesha mentioned earlier in the day, Nikkei, that continues to trade in the red with 0.5% of cuts coming in. On the other hand, we have the Chinese market, that is Shanghai index, that continues to trade in the green with 0.3% gains coming in. On the other hand, the South Korean market, that is the Kospi index, that also continues to be in the green with 0.7% gains coming in. On the other hand, the Hang Seng index, that continues to trade on a flat level around that 23,902 level, 0.04% of gains coming in. On the other hand, if we take a look at the Asian India market, earlier in the day we were expecting a flat but a start in the green, but as of now we are looking at 7 points of downtick coming in the pre-open. So flat to negative start is what we are expecting for the Indian market going forward in the day.
That's as far as the Asian markets are concerned. But where is the Indian market heading? Will market remain sideways for the next 6 to 9 months? We caught up with Mahesh Tandurkar, Head of Research and MD Jefferies, to know his views on earnings growth going forward. He also shared his top sectoral picks. Let's go across and listen into what he had to say.
I think that a lot of good news is priced in as we speak, and the market sentiments as of now, a lot of market momentum indicators, sentiment indicators look to be pretty good at this point in time. But if we take a 6-month, 9-month, 12-month view, very difficult to take a bullish call on the broader market, I would say at this point in time, given the combination of the kind of valuations that we are in, looking at the earnings growth, and also the other factor, which is the demand supply equation for equities. Demand has been good, but the equity paper supply has also been very strong. So keeping all these factors in mind, I would say most likely outcome over the next 6 to 9 months would be a sideways movement in the market.
What is your view in terms of where the market leadership is and how things are moving in terms of the earnings trajectory?
See, the earning trajectory we are looking at this year, FY26, is as of now, the expectations are at around 10-11%. Next year is slightly better at 13-14%. But as we always know that this is the expectation as of now, right? And during the course of the year, there is a good chance that we see these expectations getting revised downwards. Also, the other factor, Nikunj, that we will need to keep in mind is the nominal GDP growth. This year, FY26, the nominal GDP growth is likely to be in the range of around 9% or thereabouts. And that's because the real GDP growth is 6.5%, but then the inflationary environment is quite subdued, which is a good news for an average consumer. But when we look at what that implies in terms of the broader corporate revenue growth and corporate earnings growth, it means that those numbers are not going to look as strong as they did, say, over the last couple of years. So, in terms of earnings, as I mentioned, so most likely we would end up the year maybe at around 10% or maybe lower than that for this year, and about say.
All right, so that's the expert word coming in on where the market is headed now. But on that note, we'll wrap this edition of Market Cafe. It's a goodbye from me and Ashesha. But don't go anywhere as the market will take all the action forward.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter. It's not about left or right. It's about what's right for India. It's about holding the